Welcome. In this video, we will be discussing the RBI proposal for four-tier structure for NBFCs. So what is going to be the outline for this video? We will understand what is NBFCs, why they are very important, and what exactly triggered the RBI to have the four-tier structure and what is the four-tier structure. So this is going to be the outline or the agenda for this video. Just understand from this perspective that there was IL and FS Bank which actually tumbled down, and that is something which kind of put the focus of RBI on NBFCs also, which could again even though they are non-banking financial companies, even in that case they could trigger instability in the economy, and that is why RBI again have proposed how it is going to regulate them. So this is mostly along the line that how the framework to regularize the NBFC is all about. So let's start. First, let's try to understand what exactly are NBFCs. So NBFCs or non-banking financial companies are those companies which provide banking services without meeting the legal definition of bank. So there is a legal definition of bank which is defined. Again, you would have heard of scheduled commercial bank. So all these definitions are defined in the RBI Act. And if a bank, they are providing the banking facilities but they do not fall in the legal definition of bank, so these are that's why called as the non-banking financial companies. It is incorporated under the Companies Act of 1956 and desirous of commencing business of non-banking financial institution as defined under the section 45 of the RBI Act of 1934. So this is where it actually gets its power from. First of all, it is a company which is registered under the Companies Act of 1956. Otherwise, you see the banks are actually formed by the Banking Regulation Act. So that's how you can understand there is a difference, there is a core difference between how even though they are providing the banking services, they are very different in their character. NBFCs do the business of loans and advances like the bank does, acquisition of shares, stock, bonds, debentures, securities issued by the government. So from the look of it, you will see like it is behaving just like a bank, but there are certain limitations as well in how they deal with it. They also deal in other securities like marketable nature, leasing, hire purchase, insurance business, chit business. So all these things are important. Like for an example, in UPSC exam, they could give you a statement like NBFCs cannot participate in the chit businesses. So you should know that is a wrong statement because they can very well do the services for the chit businesses as well. So again, these are the things you should be wary of while reading about NBFC. Now, what they cannot do. So NBFC, if their primary business is related to agriculture activity, industrial activity, sale, purchase or construction of immovable property. So NBFC, it will not be considered a NBFC itself if it is working with anything related to agricultural activity, industrial activity or sale or purchase of immovable property. So this is the thing that immovable property they cannot deal with, agricultural activities they cannot deal with, neither the industrial activity. They can only work around the loans and advances to the self-help group. In fact, one of the major clients or one of the major place where their benefit goes to are the self-help group. Again, you have to remember that agricultural activities, industrial activities and anything related to immovable property is not under the ambit of NBFCs. So I hope you have understood what is NBFCs are. Now let's move forward and see why they are so significant for our economy. So just remember, it has a key role in complementing the banking sector in reaching out to the underserved and unbanked sector of the society like the MSME sector. So again, in bank you need to have a lot of collateral, you have to go through many documentation processes in order to get the loan, but not so case with the NBFC. So here they are going to serve as a parallel means through which the underserved and the unbanked segment of the society could get the financial aid. They alone account for 12.5 raise in the GDP of our country. So now this is again, you should understand they have a lot of significance. 12.5% of our GDP is contributed by the NBFCs only. Most people prefer NBFCs over bank as they find them safe, efficient and quick in assistance with financial requirement. Like in case of bank, you have to provide lot of documentation, many certificates, you have to have some kind of collateral. All these things make it little bit difficult for the people who do not have all the resources to reach the bank in the first instance. So in that case, NBFCs help to plug the gap over there. NBFC indulge in wide-ranging lending activities because unlike PSP, which have much heavier burden of NPA, hampering the expansion of lending activity, NBFCs do not have such an issue. So we know that NPA, non-performing asset, like how the bank earns money is through the interest it gets from the loan it has given to people. Now when the people stop paying interest to the bank, it is going to become the non-performing asset for the bank, and again it will become very heavy on the balance sheet of the banks, where it is losing money instead of making it. So again, this is one of the major problem in the public sector bank as of today. NBFC are not having this problem as of now. Again, NBFC have a role to play in strengthening of microfinance in India, which is critically important for women empowerment, as various self-help groups led by women and catering largely to women have been involved in microfinancing. So again, self-help group, the groups which are formed by the women, will not require a lot of money in the one go. They will go for the microfinance, and in that regard again NBFC going to help indirectly to the women empowerment by providing them with the facility of microfinance. Digital lending platform like peer-to-peer lending have become popular in contemporary times, and NBFCs have a key role in this segment also. Like peer-to-peer lending, like I can, instead of like going or asking the bank, I can directly loan to another friend of mine or family member. So peer-to-peer lending kind of a system is also there, and NBFC has a role to play in it. NBFC play a vital role as India's diversity in terms of geographic expanse, demography, caste and class composition is huge, and ensuring financial inclusion. So again, NBFC is very important for the financial inclusion also. So it is not only, as mentioned earlier, it is going to serve the underserved people. So financial inclusion is something which is achieved through the NBFC. So now you should understand that why RBI is keen to regulate them, because they are very important for our society, for our economy, for having financial freedom in terms of inclusivity also. We are trying to reach the people who cannot reach the banking system. So this is something you should remember, that NBFCs are very important for our economy as well as for our society. Now let's just quickly see what are the differences between the NBFCs and banks. So we saw that NBFCs are registered under the Companies Act, and it does do a lot of services which are provided by bank, but is still not a bank. Why? Because NBFCs cannot accept demand deposits. So it's not like you can have a saving account. So you cannot have a demand deposit in the NBFCs. They can only have the term deposits, which means for the time bound only they could keep the deposit. Banks form a part of payment and settlement mechanism, but NBFCs do not form a part of payment and settlement system, which means they cannot issue checks drawn on itself. So basically, if you are getting the benefits or getting the services of NBFC, there is no concept of checks in there, so you cannot get a checkbook. Deposit insurance facility of deposit insurance and credit guarantee corporation, which is like it's like 5 lakh you are secured in the banks. This particular facility of insurance is not available to the depositor of NBFC. So if you have a term deposit in NBFC, you cannot like, even in case of this bank collapse, there is no insurance. Banks, including the cooperative banks, can accept deposits. NBFCs which has been issued certificate of registration by the RBI with a specific license to accept deposit are entitled to accept public deposit. Now this is an interesting point you to remember, that NBFCs generally cannot accept deposit, But if the RBI has given the license, then they can. So there are certain RBI with certain NBFCs which have been approved by RBI, and only those are the one which can accept the deposit, others cannot. So these are the basic difference in terms of the bank and NBFC. They cannot issue the checks on themselves, they cannot accept the demand deposit, again they have no insurance facility against them. So these are the differences. Now let's just quickly see what is the four structure which the RBI has basically proposed right now. So there is a base layer. So what they have done in this architecture, they have created a four tier structure, which means that the banks, there will be some which will be at the bottom, and that is called as the base layer. They are the one which will require least regulatory intervention, because you need to understand NBFCs are very important for economy. You would not want to tighten the regulatory mechanism over there, which will kind of deter their main depositors or the people who are reaching out to NBFC. So you would not want them. So there will be some NBFCs who will be in the base layer, which will not require much intervention. Then there will be a middle layer where the adverse regulatory arbitrage vis-a-vis bank can be addressed for NBFC falling in this layer, in order to reduce systematic skill risk spillover when required. So this basically over here, the regulatory mechanism will be tighter from the base layer, but still not so much, and this is basically in order to stop any kind of risk spillover if it is coming. Then comes the upper layer, which is this layer will be populated by NBFCs which have large potential of systematic spillover of risk, like if they really fall or if they are not maintaining their balance sheet properly, it could have implicated risk on the economy and will have impact to ability to impact the financial stability. There is no parallel for this layer at present, so this is going to be the new layer which will come up. As this will be a new layer, the regulatory framework for NBFC falling in this layer will be bank-like, albeit with suitable and appropriate modifications. So the banks, the NBFC which will come in the upper layer will be regulated mostly along the line how the banks are regulated, but still the terms and condition would be little bit more modified. And then finally comes the top layer, which is like these banks will be highly regulated and they have major implication over the stability of economy. It is possible that supervisory judgment might push some NBFCs out of the upper layer of the systematically significant NBFCs for higher regulation and supervision. Basically, from upper layer at times it could be considered that these banks are like really at risk, so they could be pushed towards the top layer. If certain NBFCs lying in the upper layer are seen to pose extreme risk as per supervisory judgment, they can be put higher and bespoke regulatory supervisory requirements. So basically, for an example, if the limit for them to take a deposit or to like issue any loan, and they could set up a limit or set up a limit on interest rates. So such kind of more tighter regulation could come into picture if any NBFC is moved to the top layer. So this is how the RBI is proposed to regulate the NBFC, which is important so that it does not hamper the significance which NBFCs is making into the society. At the same time, it is not causing the financial instability also. So these are the things that you should understand. This topic is important from your GS paper 3 perspective, and also important from your prelims, where there could be a statement wise question regarding what are NBFC, what they can do, what they cannot do, and such kind of statements. So I hope you have understood this video. If you have any doubt, feel free to drop a comment. Thank you.